Hi, everybody. It's Bobby Blair coming to you. Thank you so much for joining us for another podcast. We appreciate you joining us. We love that you're watching it throughout the week. When you can't make it live with us every Wednesday at 7 Eastern time, some exciting shows coming up. We're booking some incredible people that will join Andy and I over the next several months. It's just seems to be getting more and more exciting. I'm actually going to invite my tennis champion, Peter Jorniak, to join me and try to excite the tennis community to listen to what it's really like, the journey of really trying to become the national junior tennis champion. What is it really like when that's your goal? And what does it take on a daily basis for that dream to have even a chance? So we're going to invite Peter. I'm sure he'll join me. Such a wonderful young man. And, listen, number 11 in the country right now, first year 18s. For you tennis people, you know how incredible that is. And, the goal just might be reached. College coaches out there, he's looking. So I think he'd be a great one. Of course, I'm introducing him to the University of Arkansas. So we'll see what happens. I love Josh Coffey at South Carolina. I love University of Georgia. There's some great schools out there, and I'm sure he'll pick the best one that fits him the best. Anyways, we're going to continue with Andy Volkert. Andy tells me he's been on the court with the legend Dick Stockton a little bit lately, the former NCAA winner. I mean, Dick Stockton beat everybody in his day, from Borg, McEnroe, Lendl, Arthur Ashe. I mean, I think he beat everybody at least once. Pretty cool. Just tell everyone how that's kind of fun and what you guys are going to do this weekend. You told me a little story that's interesting.
Yeah, it's been great hitting some balls with Dick. He's unbelievable with the racket in his hand, and he's done some things that have really been helpful to the service, the people in the service, the military. And this weekend we're going to go out to Fort Bragg, which I haven't been to. It's a very, very big base, like 250 square mile base, and we're going to do he's got a thing called Boots on the Court, and we're going to get out there. We're going to work with some of the kids of the people in the service. We're going to work with adults as well, and we're going to work with them on the great game of tennis.
That is so great to see that Dick Stockton is still giving back. And of course, Andy, you've made a career of giving back, and that's why you're here today. You're still giving back. And I wanted us to jump into the show here right away with, maybe a recap. Let's talk about what have we been really talking about the last 4 weeks. What are some of the things that have resonated the most that you believe with our clients that you've heard from? And kind of recap the last 4 weeks. We talked a lot about risk and past performance. We talked about risk and money management and a lot of things. So maybe, Andy, recap the last 4 weeks for us and kind of give some final punchlines to each of the things that we kind of discussed.
Yeah, I think you mentioned risk and past performance, and I think that's where you always have to start. We've talked about risk in doing something, risk in doing nothing. Um, there was a great investor that works with uh, Berkshire Hathaway, Charlie Munger, and he talked about risk, and that if you weren't willing to take a risk, then you weren't going to get rewarded. So many, many, many people have heard of him and listened to him. What he had to say was taken as gospel. So, there's definitely risk in what we do, and past performance isn't necessarily indicative of future results. But sometimes to get rewarded, you need to take that risk. So that was the big thing that we talked about last week. We really emphasized that. In previous weeks, we've talked about how do we manage the risk? What are the ways that you can take the reward that comes from the futures markets and try to cut down on the risk? And that is all with money management. And I think what I've said is that with the money management, that's really the most important part of the execution area of trading. You have to have the money management. Without that, you can trade too big. It's like trying to hit winners from the back fence when you're playing tennis. You're going to make a lot of errors when you do that. And even if you make some shots, you're probably not going to be rewarded. So, have a good risk money management system. Try to be conservative with that. We talked about having a proven approach, and one of the things that we did before we ever went out and started trading actual money is that we back tested, we paper traded, and we went back and back tested for a minimum of 10 years for a system to be proven. And then when it was proven, we traded our own money first, and then when we saw that it was just as good in real life as it was on paper, then we brought it in and had our clients. We put our clients into it. So have a proven approach, and that's if you're trading for yourself, you need to have a proven approach. If you're working with a money manager, make sure that they have a proven approach, and they should be able to give you, their past performance. We talked about, how do you win? What's the best way to win? And the best way to win is to not lose. And so you try to make sure that, you've built an edge. You've gotten something that the odds are so stacked in your favor that if you had that same situation 100 times, that you're going to come out ahead. You're not going to have terminal risk. Instead, you've got potential right there for you. And then maybe related to that would be, don't force things. Let the market come to you, because if you do that, then you may have to wait a little bit to get the right situation. But you don't need to be necessarily the way that we do this. You don't need to be in the market every day. You try to wait until, again, the odds are so stacked in your favor. And so sometimes you just have to let it come to you, the same way that, an artist has to wait to be creative. So does a writer. They can't write, a great book or create a masterpiece by forcing it. And so we try to do the same on the trading floor.
That's very interesting. Has any of your methodology that you've implemented now for all these years, well into a couple of decades now, based on the fact that you started, 5 years, really learning it, and then the last 13 years actively helping people invest. Are there any signals right now that are really telling you a position to take, or has this war, as it's maneuvered itself from ceasefires to not to, has anything where we are this moment in time, has your methodology told you to take any action since our last call last week?
Well, again, what I would say is that we have different sizes of accounts.
Yeah.
And so the bigger accounts will end up doing more. The smaller accounts would be, really doing trade alerts. And so those trade alerts are, you're in the market a little bit less often, but that's our best situation. But right now, we're continuing to be short in the soybean oil.
Right.
That's based on a long-term approach where, it's a relationship trade, and that relationship has been stretched a little bit too far, and historically has always come back to more realistic prices. At the same time, there's a bit of a new paradigm. I mean, with the war in Iraq, a lot of the countries that can't get oil are now going to biofuels. And so with what we're doing, the soybean oil is being used as a biofuel in much greater quantities than it has been in the past. And so relationships change based on that. And so we're being, conservative with what we're doing. But that would be the the trade that I would recommend, for a longer time frame is sell the soybean oil and buy the soybeans. With the war changes, sometimes multiple times in a day, with all the social media and what can be put out on the Truth Social or whatever platform. But I would say that it seems like it's calming down a little bit, and um, maybe both countries right now are happy with living the life of a ceasefire and then trying to work things out. So, coming back to a little bit more normal situation, although, you never know what could happen. So,
Very exciting. So soybeans are still hopefully going to be our friend. Tell us a little bit about fear of failure. I know that we wanted to touch on that a little bit. Clients seem to have a tendency to, in the early beginning stages of this commodity trading experience, have a little bit of fear of that just because they've got an elevated risk tolerance that they've had to get accustomed to. How do you kind of coach them through the fear of failure concept?
well, yeah, I think there is that initially, and so I think it's kind of like what we're doing right now in offering, the trade alert system, or managing a smaller account is, um, a lot of times if you go in and it's money that you're not going to lose sleep over, it makes it a lot easier. And the fear of failure comes in part from not being familiar necessarily with exactly what we're doing. But as they experience it, the comfort level goes a whole lot higher. So what many of our clients have done is they've come in with their initial starting principal, and after 3 months, 6 months, a year, um, we've had people that have, come in and doubled their initial investment, tripled it, quadrupled it. We even had one person who came in and added 5 times the amount of their initial investment because they started seeing what it was all about, how it worked, and they got more comfortable with it, and they understood that it was a good thing to have, either as part of a diversified portfolio, or some I think some of them, like myself, it's a standalone vehicle for me. This is where I invest my money.
Wow, which kind of leads to a question that we received from Tom from San Diego. He sent me a text over the past weekend. He goes, If I have a diverse portfolio of real estate and some ETFs, and maybe I'm in the S&P 500, what percentage would be a solid percentage for me to invest of my investable capital in the commodity world? What would be a good number you would suggest?
Well, so this is what we would, what we do is it's what is called an alternative investment, and so most people, depending upon their age and whether they've got a lot of work years ahead of them, or they're nearing in on retirement, or they're retired, that's all a big part of how they may go with a larger percentage of equities, especially when you're younger. I think that's probably a good play. As you get nearer to retirement, you want to have a pretty good idea of what you're going to be having come in on a monthly basis. And fixed income, the bond market might be starting to gain and take a little bit away from the equities market. Real estate, uh, owning a home is a big investment, and then some people like to do more than just own the home. But with an alternative investment like this, we recommend 20% of a diversified portfolio. Really, no more than that. But I think that's a good amount.
Certainly, that allows you to sleep at night, and you have the tremendous upside that this platform has to offer. People have made, fortunes in the commodity trading. Of course, they've lost as well, but very few have ever had somebody like you leading the ship and kind of mentoring and coaching the process in 13 years of, year after year positive results speak for itself. I did also receive a email from Stuart from Highland Park, and he wants to know what percentage of corn versus soybeans that you think that the farmers will be planting this year.
The work that I have right now shows a pretty normal price relationship between the corn and the soybeans. Um, I think one of the interesting things that's happening right now, and part of it is due to the war, is a lot of the farmers are having a hard time getting fertilizer, and the fertilizer costs have skyrocketed. So I'm hearing that there may be a few less acres that are planted, and we'll see what happens with um, the yield as they plant. Um, I've talked to the person that I deal with in Chicago deals with a lot of the Midwestern farmers, and what he told me was the people that he's talked to, they got a lot of their planting done in the past week, and they are going with what they would consider their normal ratio of corn versus soybeans. So in this particular case, I believe it was 2/3 corn and 1/3 soybeans. Now, um, my work again, if I had to buy one and sell the other, I would buy the corn, and I would sell an equal dollar amount of soybeans against it. But we talk about letting the trade come to you. Um, I wouldn't do it right now. In the short term, the corn's looking a little bit underpriced, but I think maybe that'll even get greater, and we'll see what happens. We're coming into a weather market, which is um, it's a very exciting time of the year in terms of the trading because the volatility goes way up, and we've had questions before. I believe maybe Gabe or somebody in the past asked about. How does the weather affect the commodities? And you start getting any extremes: too much rain or too little rain, too much heat, maybe not enough heat, and that starts getting people a little bit nervous, and so the volatility can go up, and you'll have some bigger price moves where if there's we talked about trying to forecast weather. If there's a forecast that's not calling for rain, and then all of a sudden, so the price shoots up because they think there's going to be too much dryness, and the next day it rains. Everything that went up, for a day or two or a week before can come right down when that rain comes. So, interesting time of the year with the weather and the growing season in both the corn and the soybeans. I think initially the corn is a little bit more sensitive to the weather earlier than the soybeans. The soybeans are more like July and August are very, very important months for them, but May and June really, really important for the corn.
Incredible information. I mean, I wish there were thousands of people that love the commodity trading world or were interested in it. We're on, and slowly but surely we'll start working those people into our programming. I really just think the information is just unbelievable. We have a question from Steve. He wants you to recap the trade alerts and your incentive fee type, how the whole program works for clients that are opening accounts that are sizable to people opening accounts in the 25,000 range. Explain exactly how you work with people and how you share the success with them.
Yeah, what we've always done in the past is we don't charge any management fee. Um, we believe that if we can't make you money, that we're not going to make any money. We don't, you know, take money in if we don't get you money. I've had, you know, early on, there was a gentleman that he said, Andy, this is the best check that I write every quarter because, he's writing a check to pay for an incentive fee. And he goes, I hope I can make it bigger next month or next quarter or whatever. But here, the way that it works is your account, if you started with $100,000 account, and in the first quarter that you traded, let's just say, for example, that your account went up by $10,000. So that's a net new high of $10,000. The incentive fee is done at a rate of 20% of net new all-time highs. So, if we had a $10,000 quarter, the the account would be at 10, 100,000, $108,000, because there's a 20% incentive fee. That's $2,000 that would go to Volkert Investment. Now, if the account in the next quarter lost $3,000, so now it's at 105, and the following quarter it went up to 107, made $2,000 that quarter, but it's not an all-time high, so there's no incentive fee. So for our firm to make money, we need to continue to hit all-time new highs on a quarterly basis. So that's really how the incentive fee works. And what we started doing with the trade alerts was we know that there are people out there that want to do some trading and quite possibly do it on their own. And to be able to be in the early stages of trading and tag along with somebody who has a good track record, but do the trading for themselves, we felt that, okay, we can do a monthly fee where they pay $69 a month, and every day they're going to get communication as to whether there is a trade or not, and if there is a trade, exactly what to do. We also thought that, well, geez, maybe there are some people that want to open a $25,000 account that don't have the time or the opportunity or even the desire to get in front of a screen and make the phone call to their own broker and try to execute this order. And it might be easier, if they just allowed us to do what we do. And so, we made the trade alert program a possibility where they pay the $69 a month, but we'll trade their account for them. So it's just a flat monthly fee, and there would be no incentive fee with that. They just pay a monthly fee. So there's a couple of options for individuals who want to have their money managed. They could do the trade alert program, or they could do what we've always done, and that is pay the incentive fee when their account makes new all-time highs.
That's great. Explain also how you don't pool money, how it's everybody's individual account, and how the power of attorney allows you simply to just trade the account. Explain that whole dynamic, because I think that's really, really important for people, especially people that we don't know, that don't know you, how that protects them so incredibly, and how obviously the fee structure that you've created is nothing but a win-win. There's not a little crack in that thing at all. I mean, that probably one of the most beautiful setups I've ever heard of. Explain how the accounts get set up and how they control and own it all themselves.
Yeah. It'd be the same thing as if you, went over to Fidelity and you set up your own account that you're gonna, buy index futures or index funds at Fidelity, and so what you do is, the firms that we go through are Morgan Stanley and ADM Investor Services, and those are both very highly respected, good firms. So the account is set up, in the individual's name. It could be an individual account. It could be a joint account, a husband and a wife. It could be a corporate account. It could be a trust account. There's many different types of accounts that people would, possibly choose to do. And then, as you said, the money is in a segregated account. It never gets pooled with anybody else's money. We don't touch your money. We can't touch your money. So, it's the thing that we do is that we have a power of attorney for only one thing, and that is to place orders and manage your account. So this would be the type of an account where you wouldn't trade this account; it'd be totally managed. Um, and the one thing that makes it easy for us to do this with large numbers of clients is that the one thing that we do is we group up accounts. Let's just say there's 10 accounts that have $100,000 in them or around that amount. We'll put them into an allocation, and instead of making one trade 10 times for each of those 10 accounts, we make one trade with 10 the 10 accounts. So in other words, instead of doing buy one soybean 10 times, we buy 10 soybeans once, and then that trade is allocated to each account. And so to have 10 accounts or to have 100 accounts, from a trading standpoint, it doesn't really make it any more difficult. The only thing that could possibly be more difficult with a greater number is getting everybody filled. But the markets are liquid, and that's never been a problem. So that's pretty much it. Yeah.
That is just a super structure. I think that if you do your homework, do your due diligence, you'll find that that is about as secure of an opportunity that's out there. And with a time-tested veteran who literally has spent, nearly 2 decades proving his methodology to be so spot on. If you would like to contact Andy direct,
Guys,
why you have these lights? Huh?
if you would
I'm on the
like,
computer. Sorry about that.
great to have kids and dogs.
Yeah.
All right. So let's give Andy a call, 858 761 3549. Again, 858 761 3549. Give Andy a call, have a consultation, really, really, really dig into his methodology. We're going to continue to do that. We have week 6 coming next Wednesday. We're going to evaluate how our 6 weeks went. And, at the end of the day, Andy will spend a little bit of time with us each week as we keep going forward. Our 6-week series will end next week. So I'm really encouraging everybody, if you like what you've been hearing and you trust this true professional, I think that allocating a small percentage, upwards to 20% of your portfolio, to give Andy a shot of really helping you create an additional revenue stream that could be really something special. Of course, there's no promises, there's risk, but in anything, life is one big risk. It's just walking out the door, me getting on my scooter, going to Holiday Park, playing tennis. It all involves a little bit of risk, but the reward is absolutely incredible. I want to always end each show with something positive, and I want to go back to the first episode where we talked about gratitude. And I was hoping that maybe over the last 5-6 weeks, you've built that gratitude list and you've been adding to it a little bit. And has the gratitude list been really a very positive tool for you to help you get through those tougher times that we have from time to time? I can promise you, if you build the gratitude list and remind yourself of all of the strengths that you have, all the intuition that you have, the faith that you may have, the confidence that you've been able to convince yourself and prove to yourself that you've been through so much in life and you've never been stopped. Like, you've never been told you can't go forward. And when you were told that, you actually went forward. You've been able to survive everything. I will tell you, the tools to combat all of that negativity are on this left side of that list, which is called your gratitude list. And all of the power and all of the strength that you have within you comes from that list. All the things you're thankful for, all of your talents, all of your likes, all of your relationships, your network, all of the relationships that you've built in an entire lifetime. All of these things are your battleground. It's what you have as tools to get through life in the most positive and successful way. So If you haven't built that gratitude list, I really, really ask you to do it. I would love for a couple questions about gratitude and why maybe I feel it's so powerful, and I can share with you a few stories. If you don't want to share it here on the show live, we can always have a phone call. Just message me on my Facebook page. Um, and, just understand gratitude is powerful. And I couldn't be more grateful for Andy Volkert in my life. He has taught me so much. These 5 weeks have been incredible. We've got another week to go. And Andy, you keep living your best life. I know your gratitude list is absolutely amazing. And those tools that you've built are on that side. And I'm sure they work for you every single day as well. So thank you for joining us, everybody. Thank you for your trust in us. And we're really, really happy that you're here, and we appreciate you. We know that time is valuable. Thank you for sharing a little bit of your time with us. Good night, everybody.
Thank you, Bobby.
Thank you so much, Andy. You did a wonderful job today. Great information.
Good. That's great.